I've been trading for 4 years and I'm consistently profitable. But before I figured out how to trade consistently across multiple accounts, I struggled for 2 years. And I was way more emotional about money than I ever expected. Now I manage about $2 million in capital across 28 funded accounts, and I trade them all like I used to trade one account. In this video, I'll show you why you should trade multiple accounts using prop firms, how I run multiple accounts, and real takeaways from analyzing over 1 million copy traded actions in the EchoTrader platform that you can use as the blueprint to scale your futures prop firm capital. Before I get into the mistakes in the blueprint, let me quickly explain what I mean by trading multiple accounts. Because if you're brand new to prop firms, this might be completely foreign to you. A prop firm basically gives you access to a funded trading account after you pass their evaluation, and you keep a percentage of the profits that you generate. And the reason that I like this model is because you can trade multiple accounts at the same time and start with a very low amount of capital, which is just the evaluation fee, and you can scale really, really quickly. So instead of taking one trade on one account, you can take that trade once and have a trade copier execute that like EchoTrader across all of your accounts at the exact same time. So if I'm trading 10 accounts and I make $500 on that trade on each account, that's $5,000 from the same trade executing across those 10 accounts. And you can trade many accounts at once. You can scale across prop firms, and you can scale over 7 figures, over $1 million pretty easily. It's the same setup, the same execution, the same screen time, just multiplied across your capital. And this is exactly how that works. So all you do in EchoTrader is you set a leader account, and on that leader account, you then set follower accounts. You can set 10 follower accounts, 20 follower accounts, as many as you want. And then your trade that you're taking on your leader account is then propagating and copied to all of your follower accounts at the exact same time, very quickly. And that way, you're only trading your single leader account and propagating that and multiplying that across all of your prop firm capital. And that's why I built EchoTrader in the first place with a great team. I was working in tech, I was trading, and I didn't want to spend my entire day staring at the charts. I wanted to be able to make one good trading decision and have the technology handle the execution across my accounts, because it got very difficult to manage 20 plus accounts. And over time, I've seen traders in the Echo community have some pretty incredible weeks. There's been traders doing 20K weeks, $30,000 weeks, even $60,000 plus weeks. Now, those are top end results and not what the average trader should expect. But what's important is there's a right way and a very wrong way to scale. And that type of scale usually takes time, which brings me to the mistakes that I've seen over and over again. Listen to these mistakes, and if you can avoid them, it'll put you light years ahead. Everything I'm describing in this video is why we built EchoTrader. It's a complete trade management system and trade copier that allows you to copy your one trade across all of your accounts. It also includes advanced journaling that gives you a feedback loop, and advanced AI-driven metrics that help you see exactly where you're profitable and what's costing you money. If you're interested in a free trial, the link is in the description. Now let's move on to common mistakes, because that's where most people blow up. After analyzing more than 1 million copy traded actions through EchoTrader, EchoTrader shows us that the same mistakes happen again and again. I've made those mistakes myself, so I know that they're true, and it's backed by all of the data. I'm going to share them with you so that you can get way ahead just by listening to this video. Mistake number 1 is scaling before you're consistent. And this is the biggest one. I've seen so many traders fail doing this. If you can't consistently make money on one account, adding 10 more accounts doesn't fix the problem. It just multiplies it. So if you're a consistent trader, that can multiply your profits. But if you're an inconsistent trader, that can multiply your losses. So you want to make sure that you're consistent before diving into the prop firm game. So if I was starting over, I'd spend at least 3 months trading on a demo account consistently with one strategy before putting any real money at risk. I'd find a mentor. Finding a mentor is great because you can learn from the people who have already traded successfully. And I'd focus on one setup. And I'd spend just as much time working on my mindset during that period of time as I did the strategy, because the mindset is arguably the most important thing that you will have to master to be successful at trading. I didn't do that myself, just to be clear, and it took me 2 years of suffering to become consistently profitable. And if you just practice in that safe demo environment, it doesn't cost you a thing. And if you just do that, you can probably cut that time in half or more to becoming a consistently profitable trader. The second mistake that we see people making all the time is scaling size instead of scaling accounts. And this one gets people in trouble really fast. So if you're comfortable risking $500 on one account and then you double that to $1,000 on a single account, the chances of you blowing that account, especially on prop firms, skyrocket because prop firm rules make it hard to scale as you size. They have rule limitations that are put in place that are intentionally there that reward people who risk a small amount and who are very consistent. It also alters your psychology, and your psychology completely changes when you do this. Your emotions will flare when you enter a trade. You're going to start seeing your P&L changing very, very quickly, and your heart will start beating fast. And that leads to closing positions early and taking big losses if your psychology isn't ready for doubling your risk size. So that's also when you start to revenge trade, when you're not ready for a big loss. And Echo Trader proves, out of all the data that we have, that the number one emotion that causes accounts to get blown is when you revenge trade. You can see that on the graphic here, directly from the aggregated metrics that we supply from Echo Trader. When you make that mistake, your strategy doesn't change, but your psychology does, and it blows up accounts faster than any other mistake. So instead of doing that, you can buy more prop firm accounts and copy the exact same $500 trade you're comfortable with and just trade like you would normally on a single account, but use Echo Trader to copy that trade across 10 or more accounts. And now you're trading with $5,000 collectively across 10 accounts rather than scaling up on one account where you have more of a chance to blow that funded account. The third mistake is treating prop firm evaluations like a lottery ticket. Now, prop firm evaluations might only cost $20, but if you're blowing a lot of accounts, that cost can add up very, very quickly if you blow through 100 or 200 or more accounts. And trust me, that happens. So that doesn't mean that you should treat it like a lottery ticket. You should treat the evaluations like they're a real account and don't gamble on them. If you have to gamble to pass the evaluations, number one, trading shouldn't be gambling in the first place. Gambling doesn't have an edge, trading does. And if you do that in the evaluation phase, you're probably then going to gamble on the funded phase too. And that's even worse, and it builds bad habits. And that's where the rules of the prop firm also become incredibly important. Number one, your trailing drawdown is the most important rule to understand in prop firm accounts. And it's the number one way that prop firm traders blow their accounts. So as your account balance increases, as you can see from this graphic, your trailing drawdown does too. Your trailing drawdown doesn't stay at its initial balance. More often than not, as you build an account, if you're inconsistent, people will then draw down and hit their trailing drawdown balance and breach the prop firm rule without actually breaching their real loss limits. It's the number one way that people blow prop firm accounts. So the quick rule of thumb is that you should risk between 10 and 25% of your drawdown. Drawdown is your real number, not what prop firms actually provide you in funding. Drawdown is your real number. So if your drawdown is $2,000, you might risk $200 to be at 10% of your drawdown on each trade. And depending on how quickly you want to move, you can risk a little bit more, maybe up to 25% of your drawdown if you're getting aggressive. And that also depends on your budget too. So plan that out and treat trading like a business. And then understand the daily loss limits that the prop firm puts in place. The payout rules should be good before you go with the prop firm. How many accounts you can actually run on that prop firm. And those aren't details that you should look into after you pass. You should vet those and make sure that all of those rules look really good once you're going into the evaluation phase before you ever pass a prop firm challenge. So instead of making that mistake, understand those prop firm rules and try to pass evaluation challenges within 1 month. That's the best and most efficient way that we found that traders are able to pass the evaluations and build their business and reach towards a prop firm payout. Okay, that's the most efficient way. Be prepared that you will blow prop firm challenges. That's completely normal. No one passes 100% of prop firm challenges. So be prepared mentally. If you fail a challenge, it doesn't necessarily mean that you're a bad trader. Challenges are difficult to pass. And understand that if you put in the time and the reps and the back testing and you understand your consistency and your strategy, it's just a numbers game at that point. So you might pass 50% of challenges and then eventually take those to a payout. So if I were starting over today, here's exactly how I'd approach this. This is your blueprint to actually scaling your prop firm capital. Okay, step one, get profitable on one demo account. We already talked about that. Make sure that you're not just having one good week or even one good month. You should build probably 100 to 300 trades on a demo account over a period of a couple months and make sure that you've mastered your emotions and that you understand your metrics. You need to know your average winner, your average loser, what's your biggest loss streak, so that you know when to reevaluate a strategy and when losing streaks are normal versus when they're not normal. And it helps protect your mental capacity if you can do all of this too. And then understand your expectancy, your reward to risk, your profit factor, and most importantly, what does your normal drawdown look like? Because remember, the number one thing that takes out prop firm traders is their drawdown, not their account balance, their drawdown. So you need to understand what was your maximum drawdown in that period of time. And the point of understanding all of these metrics is you can't scale something if you don't understand how it behaves. And that's why we built advanced metrics into EchoTrader, where you can see tiles like this, which is your monthly P&L. And that tells you exactly how consistent you are month over month over a longer period of time. Or metrics like this, where you can see exactly how much you've made over what period of time and how many trades. Your trade win percentage, your expectancy, your profit factor, your day win percentage, your average win loss, all tracked for you in the EchoTrader platform. Because again, if you're not tracking this stuff, and it's very difficult to track yourself, then you don't know what to measure and you don't know what your expectancy is going to look like. And we also built advanced trade journaling as well. And so with advanced trade journaling, what you can do is put together a pre-market plan, and you can then come in after the session and journal your trades. Very, very important, because that allows you to then reflect on each day. And then what you get from the EchoTrader platform is that session reflection. In that session reflection, you can reflect on how confident you were, if you followed your plan, what the market conditions were, your emotions, mistakes you made, and all of the trade setups, and even put in screenshots in all of that journal. And we're going to see very soon how that all comes back, and you can close your feedback loop from journaling every single day automatically within EchoTrader. So step one is the most important, but once you're consistent and you've gone through that step, you scale your accounts, not your risk. Very important step. This is the key. If you are properly sized on one account, don't suddenly double your position because you've added more accounts. Don't go from $500 to $1,000. It's going to mess with your psychology like we talked about. Keep the same trade size and multiply that exposure across 10 plus accounts with copy trading on EchoTrader. That's the whole point of the model. So buy accounts in batches of 3 to 5 as your budget allows. Try to pass them in a month and continue to repeat that process. Then you can quickly scale to 10 accounts, 20 accounts, even 60 plus accounts we've seen at the very top end, and well into the 7 figures in capital. And at that point, trading with smaller size really stacks up very quickly. If you think about it, a $200 trade multiplied across 20 accounts is $2,000. That small of size amounts to more than what most people are used to making in a single day. That's the best chance you have at putting all of these accounts to work for you. And that's why we built a lightning fast trade copier. That's what EchoTrader is founded on. It handles unlimited number of accounts, and you have account management and real-time P&L, drawdown, and everything you need in one place. And the way that you can do that is creating Echo groups, as you're seeing here on the screen. You simply set a leader, you set followers, and then automatically you're just trading on your leader, and EchoTrader copies that same trade over to your follower accounts, and now you're trading multiple accounts like you do a single account. EchoTrader also comes built in with account management too. This is where you see that real-time P&L, your positions, you can flatten, you can manage all of your accounts from a single pane of glass from the same location. That's really important. When you have 20 plus accounts, it's very difficult to be able to manage all of those unless you have a tool like this. Next, set and respect your daily loss limit. The brokers allow you to set a daily loss limit, and you absolutely should set it. It's incredibly simple, but one of the most effective ways that can prevent you from blowing prop firm accounts. And when you hit that daily loss limit, walk away. Close your laptop, do whatever you need to do, go on a walk, and walk away, because that usually means that you're having a bad day, and trading from there usually makes things worse. So you don't need to make that money back today. Just remember that. That's an important part of your mindset and your psychology. Know your statistics, like we talked about, and understand that coming back another day is more profitable in the long run than revenge trading is. The market will be there tomorrow. The setups will be there tomorrow. You can always come back tomorrow and make that back. And one of the most dangerous things to do with multiple accounts is Transform that one small losing day into a really, really large losing day that could then propagate across all of your accounts because you are copy trading. So just be really careful with that. And that's exactly why we built risk management directly into Echo Trader, where you can set your daily loss limits, your weekly loss limits, your daily profit limits, and your weekly profit limits as well. This allows you, again, from the single location within Echo Trader across all of your accounts to set those profit and loss limits that help you most effectively pass your prop firm challenge. And so important, understand your key metrics. Don't just look at whether you won or lost today. The market is a long, ongoing battle. It's a marathon. You look at your expectancy over time, your reward to risk over time, your profit factor, your drawdown, and look at all of them together. Because a high win rate, remember, does not automatically mean that you have a profitable strategy. You can have a high win rate and you can still be losing, or you can have a low win rate and still be winning. You have to look at all of the metrics together and understand how they all fit together. And that's how you know if you actually have an edge. And that's exactly why we built advanced Echo Trader metrics into the Echo Trader platform to help you track all of this automatically. You get advanced metrics like cumulative P&L and equity curves, daily P&L, and you get a proprietary Echo score that combines all of this into a single score that tells you how advanced are you in your trading journey. Step 4 in our blueprint, you have to close the feedback loop. And this is probably the biggest lesson I've learned over the last few years, and especially in the struggling years. You can't improve what you don't measure. Even if you have the best strategy in the world, if you're not tracking what you're doing, you're relying on your memory and your emotion to tell you what happened. Don't rely on that gut feeling. That gut feeling is not a lasting trading strategy. Remember, trading is a marathon. And your brain is really bad at that too. It'll tell you things that are actually wrong when you've reinforced bad habits. And that's why I believe you need to journal every single trade, and not only journal every trade, a lot of people say that, but you need to close the feedback loop and get the metrics on what that journal is telling you. So there's metrics like this automatically included in Echo Trader, where you can look at your P&L, your profit, by the time of day. And this is automatically revealing of maybe you have sore spots throughout the day. Maybe it's during New York lunch, maybe it's late at night where you're not trading very well, but then you're actually very, very profitable, let's say early in the morning around the New York session open. You can see that right away in the Echo Trader platform. And now let's look at more of that advanced journaling. Journaling isn't some magical productivity exercise that you should just do just to do. You actually want feedback from that journaling, and that's exactly what we've built in the Echo Trader platform. You're gonna get journal insights that tell you exactly where you're most profitable based on your confidence, your emotions, and where you're least profitable. So if you're feeling those types of emotions for that day, Echo Trader can tell you that, and then you can recognize those faster and level up your trading faster. And this is where journaling gets really good. You can start to break it down by emotion, by setup, by mistake, market, and your pre-market plan even. And you can filter based on custom tags, your confidence level, and if you followed your pre-market plan. And then you can start to cross-cut all of those metrics and also see what the community is doing with all of those types of emotions and setups too. So you can even learn from the top traders. This really closes that loop and gives you the exact metrics that you need to help improve those daily habits one day at a time. That's really what it's about in trading. So the takeaway here is you measure the result and you measure what matters. Echo Trader finds those patterns for you, so you don't need to dig through spreadsheets and trade off of emotion to be able to find those patterns. And let me give you an example from a real user. We had a power user in Echo Trader who discovered through his own data that certain times a day were consistently costing him money. And when he layered on low confidence trades and revenge trading, his P&L absolutely plummeted. But outside of that, he was consistently profitable. So he could recognize from those patterns that Echo Trader automatically delivered back to him, and through journaling his trades consistently, which is a great habit, and improve in a very short period of time. And without a trading buddy that tracks these emotions and metrics for you, your feedback loop is really long. It takes a long time to be able to learn those lessons, especially if you reinforce bad habits. And some people never come out of that downward spiral of their own negative patterns. Echo Trader helps you improve those bad habits and come out of them very, very quickly. And that's where it gets really interesting, because now you're not just asking, why did I lose money? You're asking, what conditions consistently led to my best trading? And not just for that day, but over a long period period of time during that entire marathon? And that's a completely different question. That's how you start turning trading into a skill that you can actually improve. And the best part about all of this, it's not just full-time traders doing this. In fact, most people are not full-time traders. We have forklift drivers on the EchoTrader platform, truck drivers, warehouse workers, Army veterans, moms with 3 kids, people who are building businesses, people who are building this around their lives. And done correctly, trading doesn't mean staring at charts for 8 hours a day. It should absolutely not mean that, in fact. For a lot of traders, it can be a 1 to 2 hour a day skill. And if you have a good defined process and you've mastered your mindset, then that's all you need to become a profitable trader. And at EchoTrader, we genuinely want to help our users become better traders. That's why we built the platform. They can become better traders and scale their capital. And that's why we built tools that truly complement your trading. It's built for beginners and experts alike to be able to sharpen their edge. So if I had to boil everything down that I've learned into one blueprint, into 4 simple steps, number 1 is get consistent on a demo account, understand your numbers, build a large enough sample size to know that your edge is real, and then start scaling your accounts. Don't scale your risk size, scale your accounts on prop firm. Respect your daily loss limit, very, very important. Stay within those prop firm challenge rules. Don't revenge trade, that's the number 1 emotion for trading, and you journal every trade to be able to close that feedback loop. And then you're reviewing your data every single week. And reviewing your data every week just becomes a glance at a dashboard with EchoTrader. You keep improving with software that tightens that feedback loop, like with EchoTrader, and you can highlight your bright spots and your sore spots. And because the goal isn't finding a magic strategy, remember that. It's mastering your mindset and mastering the process that can then help you scale your capital. And your goal ultimately long-term is to build a trading business that you can repeat, measure, and scale. So that's how I trade multiple accounts. If you want the tool that does the copying and the journaling for you, our platform EchoTrader is linked in the description. If this video helped you in any way, give it a like and hit subscribe. And drop a comment telling me how many accounts you manage. I read every one. I'll see you in the next video.